Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Firstly, let's take a quick look at what's happening globally. Most of the European and American indices ended with a negative bias. You could see that the American markets were down close to 0.5% each. Europe was rather muted in trade, but the start in Asia has not been the best as of now, because if you're looking at it, most of them are trading down. The SGX Nifty is also indicating a downtick. Let's also take a look at how the ADR spanned out in trade to get a sense. HDFC Bank ADR was down 2.5%. Vedanta, Infosys, Tata Motors, all of them seeing selling pressure that's coming in. The only stock that managed, or the ADR that managed to hold up, was Dr. Reddy's, and because that is in the underlying strength that we've seen in the pharma sector across India. So that's why it's moved up. Apart from it, there was selling pressure that was seen. The SGX Nifty is indicating a negative outlook. It's down almost 32 points at this point of time. So clear weakness on opening is something that we can see. Opening close to the 10,800 mark in trade. Now the Nifty was ended up just 13 points. It came off significantly from highs of the day, but there was selling pressure that was seen, no doubt, on the mid cap and the small cap end of the market. So there is selling pressure seen, but the banking stocks are doing well, because if you're looking at the Nifty Bank was up almost 35 points. The Nifty PSU banks has been surprising, really having a very poor YTD performance. The last few days have been really good for the Nifty PSU banks. It's up almost 1.5%. What the other two sectors that did well, IT has always been doing well for the year itself, but pharma again has started to see a lot of revival. It's up almost 10% this month itself, because if you're looking at the month-to-date performance, you can see firstly media index was down almost 0.7%. That was rather weak. Now if you're looking at the month-to-date performance, the Nifty Pharma index is up 9%, the Nifty PSU Bank index is up almost 6%, and the Nifty Oil index is up 3%. And these three have been pretty much the laggards of the market. What is not doing well? High beta, infra, real estate, and small cap. They have actually seen selling pressure this month. Even if you look at a YTD performance, look at the performance of the IT. It's actually when the Sensex is up just 5%, the IT index is up almost 20%. And remember, 25 years of Infosys today, and tomorrow the TCS buyback. So again, this will be in focus. Nifty FMCG, most of the counters on the FMCG space, be it a Britannia or an HUL, are trading at lifetime high. No doubt there is buying pressure, seeing on this index. What has not done well? Real estate, small cap, and PSU banks. PSU bank has seen a marginal recovery that's coming in, but on a YTD performance, it's still trading weak in trade. Now, if you're looking at the counters, look at the counters on a fresh 52-week high or a Bajaj Finance, Britannia, DMart has an analyst meet today, so should be in focus. Surprisingly, Glaxo Pharma, despite its high valuation, is trading at lifetime high. Infosys, Page, and RBL Bank. So all the quality names are trading at a fresh 52-week high, quality at the 52-week low for problems of its own. Now flows, FIs have been net sellers, DIs have been net buyers. They bought in almost 500 crores. Most of the FIs over the past few days have been selling. So the big buy number that came in because of the HDFC FI window open has actually evaporated, and DIs have been buying almost 5,300 crores in the cash market currently. The Nifty was up 13 points. What contributed? IT and private sector banks, while the HDFC twins were the main reason why we saw a little bit of sell-off that came in the market in the second half of trade. No doubt, despite the Nifty being flat, high open interest build-up was seen on the Nifty. Open interest build-up of 4% on the long side. Similar was the case with the Nifty Bank, which saw open interest build-up of 5% on the long side. Now, if you're looking at where positions are taken, put writers are active at 10,700 and 10,800. They've even started writing it at the 10,900. So it seems at this point of time that still the bull market will continue on the market. Now, if you take a look at where positions are taken, it is expected to be range bound in and around the 10,800 mark, because the green lines, the red lines indicate that the people who are bullish, and the green lines here indicate the people who want the market to fall down in trade. So it will be between the 10,700 and 10,900 level in trade. If you're looking at the stocks in the F&O band, no changes. Dewan Housing, Balrampur Chini, Jet Airways, and Just Dial continue to be part of the F&O band. No doubt, if you're looking at the PCR, the Nifty PCR moved up, so did the Bank Nifty PCR, because the market itself was showing strength in trade yesterday. Some of the stocks I want to highlight: Dish TV, big block deal yesterday, high open interest build up of 42%. Ended pretty much from the day's low, but nevertheless fresh buying was seen. Page Industries, high open interest build up, fresh buying was seen on the counter. The other stock I want to point out is Kaveri Seeds. Had a big spike in the last 15-20 minutes of trade, open interest build up of 16%. And the last stock I want to talk about is RBL Bank, at a fresh lifetime high, continues to see high open interest build up and fresh buying that was seen. But with that, let's go across to Courtney Collins for all the top international headlines.
First up, the Fed's dot plot has upgraded the projected number of rate hikes this year to 4, as unemployment falls and inflation overshoots its target faster than expected. The FOMC raised rates for the second time this year, with Chairman Jay Powell saying the main takeaway is that the economy is doing very well. He also promised a news conference after every meeting starting in January.
As chairman, I hope to foster a public conversation about what the Fed is doing to support a strong and resilient economy. And one practical step in doing so is to have a press conference like this after every one of our scheduled FOMC meetings. And we're going to do that beginning in January. That will give us more opportunities to explain our actions and to answer your questions.
The Hong Kong Monetary Authority has followed the Fed, hiking its base rate by 25 basis points to 2.25%. The city's property-reliant economy has so far shrugged off U.S. monetary tightening, but reality may soon bite as bank lending rates tick higher. A Bloomberg survey also found most economists expect the PBOC to raise its reverse repo rate by 5 basis points after the Fed's tightening. Bitcoin has extended losses, bringing its 4-session slide to as much as 20%. And questions are mounting about whether the world's biggest cryptocurrency was manipulated during last year's record price surge. One researcher says another digital currency, Tether, may have been used to boost Bitcoin to December's high. The Justice Department has already opened a criminal investigation into illegal trading practices. And the biggest single sporting event on the planet kicks off on Thursday with soccer's World Cup in Russia. The hosts will face Saudi Arabia in the first of 64 matches, culminating in the final in Moscow on July 15th. The big corporate winners are likely to be brewers, TV manufacturers, and betting companies. And while they're at loggerheads over NAFTA, the U.S., Canada, and Mexico have been able to come together in the sporting arena, winning the rights to jointly host the 2026 World Cup. Global news 24 hours a day on air and at TikTok, on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Courtney Collins. This is Bloomberg.
We got the 25 basis point rate hike as expected. No big deal. But it was a very small shift in the dots that hit the bond market, hit the stock market, is hitting Asian markets as well. People, I think, are still trying to figure it out. Dots go, D-O-T-S on the terminal, tells you this story in pictures. You have 7 dots saying, I think we're probably going to need to hike rates 4 times this year. Those dots represent FOMC members. Now there's 5 that say, no, I think 3 is more like it. That had been evenly divided, 6 versus 6. Now, it's interesting, we had Roberto Perli on Bloomberg Television just a couple of hours ago. He was the Division of Monetary Affairs at the Fed's Board of Governors. Very important position, a lot to do with setting policy. Here's what he said about the shift in the dots.
It's not a solid signal. I would be inclined to think about it in terms of more noise than signal. I think what the Powell Fed will do is we'll look at the data and take his clues from there. But I think the dots are a little bit just an exercise in forecasting.
Now, it's true markets also saw some hawkishness in the change in the FOMC's outlook for the economy. A little bit stronger GDP, lower unemployment, inflation a little bit stronger. But I think people maybe should pay strong attention to what Jay Powell said at the press conference. He sees wide uncertainty bands around things like the natural rate of unemployment. Where's the neutral rate? The rate maybe would signal the Fed should stop or only go a little bit further. And he said the Fed policy will be guided by incoming data. We will try to keep our minds open. So maybe we're seeing a little more hawkishness, at least in the Fed chair, than is actually there.
Well, back to Indian equity markets. Stock of the day is Dish TV on back of the block deal which happened. Red Enterprises has bought in 0.7% equity in the company for a sum of around 93 odd crore. Rakesh Jhunjhunwala has bought in a good 1.30 crore of the shares of the company at a price of around 71.3. Do remember the fact that Amansa Holding also holds a good 2.5% in this company. If you look at the shareholding pattern, notably promoter shareholding has come down in the last 1 year. Currently stands at 31.46%. 46%, and the public shareholding stands at a good 68.5% as per the BSE data available. If you look at the promoter shareholding, it was in 2017 quarter, March 2017 quarter, it was a 64.5% figure, which has now come down to 31.5%. However, if you look at the Bloomberg consensus rating, that's a pretty picture there, a pretty strong target that we're looking at 92.57, which indicates an uptick of 26% from the current market price. In terms of the buy rating, 26 analysts suggest a buy on this counter. In terms of hold, we have 5, and only one of them who actually have suggested a sell on this counter. Also, the company has guided an extremely strong guidance. After underperforming for 2 years, expected a 9% growth in terms of its revenue for FY19. It's expected to add around 1.3 million subscribers, net million subscribers in FY19. Most of the revenue growth is likely to be driven from ARPU improvement, capex guidance of 1,200 crore, and also if you look at the EBITDA margin, that is expected to significantly improve from the current levels of 30% to 34%. Merger synergies from Videocon to expected to aid the margin improvement for this counter.
Let's shift focus to the commodity space and look out for oil prices, which are currently trading absolutely flat. But remember that overnight we did see WTI rising for the third consecutive session on a surprise inventory decline. So the EIA has actually reported an inventory decline in the US markets to the tune of about 4.14 million barrels for last week. Also, we have one of the brokerages which has reiterated that $100 a barrel looks increasingly possible, and that's Bernstein that I'm talking about. As far as base metals are concerned, the LME base metal index in fact snapped its 3-day losing streak. Nickel, which was up about 2.7%, was the top gainer in trade and surged the most in almost a month now. This was on the back of heavy buying in the Shanghai Futures Exchange, which bolstered the bullish outlook for the metal. As far as other base metals are concerned, we had aluminium and tin, which declined more than 1% each, and we had copper, zinc and lead, which advanced on the London Metal Exchange. Now, if you look at the Shanghai Futures Exchange, base metals are in fact trading on a mixed note, with Shanghai Steel that is trading currently up, and yesterday it closed at the highest level in about 3 months. As far as precious metals are concerned, we are seeing some bit of rally come about for gold prices on account of some weakness that we saw for the dollar index in the overnight session.
Well, amongst the stocks that we are tracking in trade today is going to be HDFC Bank, where the cabinet has approved its proposal to raise about 24,000 crores via FDI investment. Remember, the board approval or plans to raise 24,000 crores to meet or fund future growth was announced back in last December. This move, of course, is subject to the 74% cap for foreign shareholding, and you might in fact see some positive reaction on this counter today. That apart, we're also watching out for Cipla, which has said that its Ugandan unit Cipla QCI is exploring an IPO, and in fact it has appointed Renaissance Capital Kenya as a book runner. That apart, there's also USFDA approval that has come in for generic Isuprel injection, so watch out for Cipla as well. Oberoi Realty is another one where the company's QIP has opened, the floor price of which has been set at 509.29, which is a 3.5% discount to yesterday's closing price on BSE. So you could actually see some negative reaction on this one. You also have Hindustan National Glass. Now this is not a very liquid stock, but they have announced selling 11.23% stake in H&G Float Glass joint venture for about 125 crores, and that is as compared to its market capitalization of about 700 crores. So watch out for this name as well. That apart, you have a ET report which says that the deal between Z Group and Reliance Broadcast Network could actually fail over price revision. They've quoted sources saying that Z now wishes to lower the price. Remember, both these companies had announced a deal where Z would buy Reliance Broadcast Network for 1872 crores, and it was back in November 16. So you will also have Reliance Capital, which will remain in focus on the back of this news. Negative development for Reliance Capital if this were to happen. You also have Usha Martin, again on the back of an ET report, which says that you have 4 big players which have shown interest in the company's 1MT Steel unit. So you have Liberty Group and Kalyani Steel, which are said to be in fray. Tata Steel and JSW Steel are also said to be in the fray, and that is according to the ET report. The company has said that they're expecting non-binding offers to come in a 2-3 weeks time span. So again, that's another one to watch out for.
ICICI Bank has informed the stock exchanges that they will be selling up to 2% stake in its insurance business, which is ICICI Pru Life. Now they plan to sell up to 2.87 crore shares via various market issuances. Of course, this involves either doing it via offer for sale on stock exchanges or block deals, or in multiple tranches, what the company has informed the stock exchanges. So whatever the mechanism be, ICICI Bank will be selling shares worth nearly 1,200 crores in ICICI Pru Life. Remember, in 2016, ICICI Pru came out with their IPO. That was priced at close to 334 rupees per share, and now the shares are trading nearly at a 23% premium to that price. Clearly this means that ICICI Bank is still on a monetization spree. Probably the 1,200 crores that it receives, which is of course calculated on the basis of the current market price, would be aiding its capital adequacy ratio. And on the other hand, they will also be able to comply with the regulatory norm, which entails a minimum public shareholding of 25% for listed entities. So from the compliance point of view, they will be able to meet the 25% minimum public shareholding, and on the other hand, probably this capital could be used to augment and aid their overall capital adequacy ratio.
Today we've bought land in 4 cities. So it's Hyderabad that we opened 2018. 2019 we go into Mumbai, where we try to be omni-channel from the beginning. So we will open stores, we will open smaller touch points, and we will open the online channel. Then the year after we aim at going to Bangalore and then move on to Delhi. So this is the primary take on it. Then we're looking at other cities too, like Pune, like Surat, Ahmedabad, Calcutta, Chennai, and many more. But all will come in time, and the online approach will maybe make it go faster than we initially thought. So hopefully we can reach more of the many Indians in a quicker time than we were expecting only 2 years ago.
So when are you planning to go online? Is this as soon as next month? Because you're launching your first store. Are you going to launch both together?
No, so Hyderabad will open like a classic IKEA store. So we can test and learn over the first year. And then when we go online in Mumbai, we will come as an online player. So we will do both store experience, we will have online experience.
And also, are you looking at changing the sizes of your store to reach more number of Indians? Is that anywhere in your strategy to connect with more people in India? Because space is also an issue sometimes in cities like Mumbai, especially in your metros and in your tier 1 cities. So if you could just tell us if that in any way will change your expansion plans.
So as of today, we're building the normal big IKEA stores that people have become accustomed from across the world. So the one in Hyderabad is around 400,000 square feet. The Mumbai one is similar. The Bangalore one will be similar. In parallel to that, we're exploring smaller format stores, which might be around 30,000 square feet or 15,000 square feet. Still not a small store, but we would like to be able to come more into the city centers and being able to reach people in different ways. And together with the online experience, we believe we can really create an IKEA experience that is wherever, whenever, and however you want as a customer. So we are very, very keen on this and super excited about getting going.
On the big brokerage calls for the day, first we have is Edelweiss on Aditya Birla Capital. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 199, which suggests a potential upside of more than 42%. Now according to the brokerage, Aditya Birla Capital is in a sweet spot to capture the financialization story of India. Now the brokerage says that there are multiple levers to sustain best-in-class growth and improved return ratios for the company. The company has a promising blend of different businesses, which include the likes of asset management company and non-banking financial company, housing finance company, and life and health insurance companies. Now these businesses are scalable and also have a sustainable model according to the brokerage. Now the brokerage also says that the business model of Aditya Birla Capital share the likes of successful financial entities like HDFC and Bajaj Finance. Lastly, it is expecting the company's EPS to grow at a compounded annual growth rate of 30% over FY18 to FY20, and says that execution of business strategy is the key risk to potential valuation re-rating when it comes to Aditya Birla Capital. Second, we have a CLSA on ICICI Securities. Now the brokerage has initiated coverage on the stock with a buy rating and a target price of 520, which suggests a potential upside of 46%. Now according to the brokerage, ICICI Securities is best placed to benefit from financialization of household savings and from its parent ICICI Bank's brand and reach. Among the company's businesses, the distribution and margin financing segment is expected to drive revenue expansion for the company, whereas the brokerage segment segment is expected to remain subdued. Now, the brokerage is expecting the company's revenue and net profit to grow at a compounded annual growth rate of 17% and 21% over FY18 to FY21. Now, the revenue is expected to grow on the back of expanding client base and rising wallet share, while the net profit is expected to grow on the back of operating efficiencies. Now, lastly, the brokerage says that the dividend yield of ICICI Securities is one of the best among the Nifty companies, and the company is now trading at a discount to global peers.
Do let us know in the comment section below who you're supporting in the World Cup 2018. I personally am supporting Egypt. Now, meanwhile, before that tournament starts, there's several stories on the website that you can read. That's BloombergQuint.com. Here are just a couple of them. The government is now open to the idea of listing Air India as it struggles to find a way to sell its stake in the debt-laden carrier after one failed attempt. And US President Donald Trump was nominated for the Nobel Peace Prize for his work in reaching an agreement to work towards denuclearization of the Korean Peninsula. He was nominated by 2 members of Norway's governing Progress Party. All right, that's all you need to know going into trade today. Up next is Indian Open, and that'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.